It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Hi guys, good morning, 23rd of July 2019, 8 AM CET, Piotr here, meaning this is a pre-London live market coverage only here on the Light Forex global YouTube channel. Nothing extraordinary when we are talking about the calendar today. Just Richmond Manufacturing Index, existing home sales when we are talking about the US. 10-year bond auction in UK, but overall, as we discussed, UK new Prime Minister might be the very good excuse to spur pound volatility, and what's random name also pointed out in the chat. Anyway, we are going to discuss the charts after the risk warning. So let's start with risk warning, guys. Please bear in mind trading effects on margin trading. Crypto on margin carries a high level of risk, may not be suitable for investors. You can sustain a loss of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay, more fireworks. I do expect more fireworks start tomorrow, between Wednesday and Friday. Tomorrow we have EU PMIs, then we have on Thursday ECB day, and Friday we do have US GDP. All these events we are going to cover live. Yes, we are going to cover live here on Light Forex global YouTube channel. So we do have two meetings tomorrow. As usual, 8 AM CET, we are going to cover pre-London Open, and then 9 AM CET. So just after the London Open, we are going to watch and cover EU PMIs. Then Thursday, 8 AM as usual, pre-London Open, and then 1:30. So a little bit different than what we usually have. It's going to be ECB day, and we are going to cover ECB day live. Friday 8 AM as usual, pre-London Open, and non-usual Friday 2:15 we are going to cover US GDP live as well. So pretty busy second part of this week for us. We don't have scheduled educational live trading room for today. I might prepare crypto charts, so if you have a subscription to the channel, you are going, and you have this ring bell clicked, you are going to be informed about new event, and if there is anything interesting from crypto perspective, simply I will go live with crypto charts later today, so stay tuned. Anyway, time for charts. As I mentioned, nothing extraordinary when we are talking about the calendar. Also, nothing extraordinary when we are talking about the options market. And in that case, only dollar yen 108. We do have 800 million, so less than billion on dollar yen, around 108. And dollar yen's looks like they're waiting for Bank of Japan and FOMC. That's how I see the things right now. It might be some kind of the consolidation. And we have unusual amount of 700 million on cable at 124. All right. So let's have a look. Let's start with dollar yen. Let's start with dollar yen and what we have here from daily chart perspective. There was an attempt to break lower below 107.50, but on a weekly chart on Friday, bulls were able to get back, and we closed from the weekly chart perspective. Right, we closed, as you can see, around 107.50. Now, let me hide this broken trend line from daily. All right, now. In case of where we are on the dollar yen, in case of the weekly chart, let's start with the weekly chart. It's right now because we are getting closer and closer. If you remember, I held 3 educational webinars in June, right? All of them are recorded, all of them are available on the archive section here on Light Forex Global YouTube channel. So in case you don't know what I'm talking about, you are more than welcome to visit and to watch those educational webinars. So from dollar yen perspective, right now 106.60, it might be some kind of the unfinished business based on the possible swing low, and still in my opinion 107.50 it's much more important, and that's what was seen last week when market was trying to get back, when the bulls were trying to push dollar yen towards 107.50. One of the reasons is this breakout over here to the left when we are talking about the week ending in April. Of course, we have this spike to the downside from the very beginning of the year, but I would say that the lower end of that spike to the downside, there was a very low liquidity. Anyway, 107.50 is much more important. Doesn't mean that we cannot try to hit the stops based on what we seen last week, right? So what I'm talking about from the bull's perspective, if you are a bull, right, you are waiting for the stop count below previous week low and watching this 107, 106.60 zone visible here, right? And then you wanna see the weekly close above 107.50 or higher. On the other hand, when we are watching what is going on here, also we have levels close to 108.60, sorry, as a possible supply. So overall, that's what I've mentioned at the very beginning. It might be that we are going to still have some kind of the consolidation ahead of Bank of Japan, ahead of FOMC. Going lower, this consolidation is better visible on daily chart. So just change the color. So this type of the consolidation possible, again ahead of the 2 central banks, to the upside 108.60, to the downside 107.50, and then 107 and 106.60. That's how I see the things here. Right now we trying to move higher above yesterday high. So that's quite positive. Market may want to look for a little bit more stops to the upside on dollar yen, right? Meaning that if the price action on Wednesday and Thursday from the previous week, right, when we hunt the stops below the low from the 3rd of July, it was the just stop hunting and failure. So right now it's time to hunt for stops to the upside. In that case, as long as we are above yesterday high and Friday high, right? So looks like we are trying to get out of this range from Thursday, and if we are managed to close above, right, the top and the end opening level from Thursday, we might simply double that range to the upside, and as you can see, 108.60 might be the case. Now, very important thing, I also been discussing during this webinar, educational webinars I held in June. What is important here, look for a Friday close. We were testing this stop of the Thursday, but there was an upper shadow. Yesterday we hit Friday and Thursday high, but the close was again inside that range, right, below Thursday open. Again today we trying, right, and that's gonna be the case. We have to have daily close at least above Thursday open, right? Would be great to have a close above yesterday high. That would open 108.60, right? So that's what bulls are looking for. Bears, on the other hand, waiting for a failure around the current level, waiting for a move back below yesterday high to try to push prices lower below Thursday top range, right, and try to push prices lower again. Especially with this scenario, you want to make simple measure. We are using just simple measure, right? So right now, if we are going to fail right now, as you can see, that's the perfect level when we want to make some simple measure when it comes to size of the move. So that the failure here, that could be the case if you are a bear. Again, trying to summarize, if you are a bull, you wanna daily close above this level. Taking into the consideration a little bit of the weakness seen on the commodity currencies, right, as well as a little bit of the pullback on indices after the Friday sharp sell-off, some kind of the consolidation with the attempt to make new low, not big bounce. So these lows again on DJ, for example, might be again under pressure. We are going to discuss indices in a second. So let's finalize this dollar yen. So let's have a look what we have from intraday chart perspective. What is going on here? So again, very similar moves during the Tokyo session, and we may laugh or not, but invisible hands of Bank of Japan might be the case here, right? So what we've seen here, and yesterday it was the rejection, right? But we didn't take out the high. Today, after such a move, we were able during the Tokyo session to take out this high, right? So what we might see a little bit attempt to go a little bit higher from here, or simply what you may want to watch in that case, we need, as you know, we need 2 points to try to draw the line, right? So from that perspective, we are right now around the very important levels. Bulls want to hold that line, above that line, to push prices higher. Bears want to, as soon as possible, to push below that line, to push below Monday low, 108.07, right? Overall, move below 108. The figure that could be the solution for sellers. Important thing, the last sentence, important thing in my opinion, from that perspective, is going to be close below 107.90, 107.95. So that's where we start the Niagara fall. That's the one, and the second, something close to weekly open. So plenty of levels. Consolidation is probably going on ahead of the Bank of Japan FOMC. So the extremes might be tradable from the intraday perspective. Some kind of the failures and quick counter attack might be the solution. From the bears perspective, you wanna see the prices below 108, and especially daily close below. Daily close below the yesterday high, and the best thing inside the Thursday range, right? Bulls hoping for a close above yesterday high and 108.60 as a possible target. So that's about the dollar yen. Let's have a look what we have on the pound, especially from the new prime minister perspective. That might be good excuse to try to spur the volatility on the cable, right? I think from the bulls perspective, first thing first, from the daily chart perspective, all right? What we have here, we were trying to hold, based on yesterday price action, we were trying to hold Wednesday high. That's what we discussed yesterday. It worked yesterday. Now we might work towards over under here, right? So it might be the case that we are trying to hit the stops, and during the London session we might see a little bit higher prices, then swing low. So we may try to finish the business based on what we've seen last week, all right? But bears might try to push the price even lower, right? Below previous week low, right? So we might try to hunt more stops on the cable. So taking into the consideration what we discussed here on daily, right? Again, over under, that's the first possibility. Second possibility, finishing the business based on the possible swing low, or equal moves with stop count below previous week low. To the upside, no change, 25.8026 as a first possible supply. And what is important for bulls is to take out and close above the trading range from the 12th of July, creating the manipulation point here, meaning that once we are going to be able to close with good distance above this this zone, then we may try to double that range, and 27.8028 might be in case of the stop hunt towards, so the stop hunt towards the high from the 25th of June might be in place. Intraday perspective, as you can see, we were trying yesterday and pushing lower. So failure. Trend line for bears. In case you are going to see attempt to break higher, retest weekly open, blue dotted line, move lower below the trend line, that might be invitation for sellers. From the horizontal levels perspective, That was the zone we were trying to use as a demand, but we didn't take out any kind of the supply sell off here. So from the bears perspective, right ahead of the London Open, 24.70, 24.80, then weekly open and 25.20. Very narrow range from the pound perspective. That's something unusual. To the downside, we are trying to take out, actually we took out yesterday low, so the stops were taken out. Very steady move to the downside. We are going to test right now the levels closer to 24.50, 24.45. That's where some kind of the demand might be in place, and eventually the intraday manipulation points seen last week, and we are talking about the levels closer to 24.20. That's how I see the cable here. Euro dollar, EU PMI tomorrow, Thursday, ECB day, and the question is if we are going to hold this 1180 level, the bottom of the possible demand based on the daily chart, right? Looks like, especially that we are finally over the Tokyo session, we broke through the latest lows, right? So looks like the way is open, even towards 1140, 11 psychological 11 zone, all right? The next green from the daily chart, and moving even lower will open the blue zone, so the possible demand based on the weekly chart. To the upside, there was a failure. Around 1280, right? We've been looking for over under towards 1320, 1350, but looks like bulls are so weak that the bulls were not able to push through 1280. Liquidation and stop count, the key here, as we discussed, the bottom of this possible demand range, and that might open the lower levels here on the euro dollar towards 11.30 and 11 short term. From that perspective, when we are talking about the possible supply in that case, so of course yesterday low, broken yesterday low, and the weekly open as the first possible supply. The situation may change with the price move above 1225, so a little bit of more neutral tone might be in case. Only above 1225 we might retest 1250, and again the previous week top around 1280, but as long as we are below weekly open, as long as we are below 1225, bears are dominating here on euro dollar. What I've mentioned, there are a little bit weaker tone is seen from Friday, since Friday, when we are talking about the commodity currencies. Here is the Australian dollar. Again, Thursday attempt to break higher, stop count to what we've seen to the left. We hit the other supply, right, on Friday around 70.82, strong push lower. Now the key here, of course, is a Thursday bottom, right? So again, psychological 70 level here as a key. Below 70, we might expose $69.60 level, right? Going lower from the intraday chart perspective, buyers might be here based on this over under So that's the confirmation what we talked based on the daily chart, that psychological 70 level, and as you can see from the intraday chart perspective as well, right? And then in case of the breakdown here lower, we have the combination of the daily and the intraday chart, the zone over here to the left, and that's what we discussed based on the daily as well, something around 69.50. To the upside, when we are talking about the possible supply, I think that the levels closer to 70, 40, 70, 50. The base of this breakout candle, right? That's the first possible supply when we are talking about the Australian dollar. Also Canadian dollar getting weaker, and looks like we are about to retest why it doesn't work. Yeah, looks like we are about to test the mid of this previous demand, possible demand zone. All right, and in that case we are talking about the 132 level. All right, so that's the base over here, the range from that day, 21st of June. That's where possible supply resides, possible demand because of what happened yesterday, because of the daily close above the low to the left, when we are talking about the beginning of this year, beginning of February 2019, right? So might be the case of the tiny pullback and rally towards the supply. So let's have a look from the intraday perspective where we are here. The hourly chart, right? So very short term, we might talk about some kind of the consolidation. So if we are going to take without the shadows and we try to double, right? So looks like the range we discussed from daily might be in play. So from that perspective, buyers probably closer to this mini range, in that case 131, 130.90, right? And then lower towards 130.50. From the seller's perspective, intraday failure around 131.50 might be good excuse to push prices lower towards 31, or the rally and failure towards 32. So looks like on dollar CAD every 50 pips there is a possible above supply, below demand. So let's talk about indices right now. No change in view to what we discussed previous week from the Dow Jones perspective. As long as we are above the green zone, so as long as we are above 27,000, 26,900 based on the daily chart, higher prices possible. A lot of work ahead of bears to try to push prices lower here, right? From the intraday perspective, the Friday sell-off, especially the how we close the week, right? On the weak side, showing the possibility, right? Showing the possibility to move a little bit lower from here to retest the previously mentioned 2690 based on eventually based on the stop count when we are talking about the yesterday low and when we are talking about the Thursday low, right? So in that case, this type of the price action could help retest 27,000, and that's where we should get our answer when we are thinking about what next. Now, of course, the discussion here is going to be, all right, 25 basis point cut. Is it going to be enough from the bull's perspective? It might be. Of course, we are going to have plenty of time to discuss it, but just to highlight it, you know, the first initial reaction, because what market is talking about, yeah, let's get 50 basis cuts, right? That's gonna be great, right? But the thing is, if we are going to get just 25, the initial reaction might be to the downside, but then market may realize, all right, so the next 25 is on the way, right? So it might be that we are going to have a cycle. So all in all, I think that we are going to see the retest of 27,000, 26,090 on DJ, and then the important thing is the close, at least the daily close, from the bear's perspective below this white green range, that possible demand zone. Okay. So let's have a look on Nasdaq 7,900, and it's a little bit bigger volatility. From the daily chart perspective, it looks, when we are talking about the bears, it looks a little bit better than DJ because there is a failure on this trend line, right? What we discussed for quite some time already. 2 points, 2 tops, rising trend line, and stop count, so showing up above the trend line and then unable to close and get back below. Of course, right now we are trying to hold this 7,825, 7,800, so the previous top, but I think from the medium and long-term perspective, this top is more important. So 7,685 down towards 7,630. This zone is much more important from my perspective. I'm bearish, but of course I'm not gonna trade it blindly. I was trying to visualize myself this possible head and shoulders, small head and shoulder over here, and I'm going to wait patiently here from the Nasdaq perspective. We do have gold weakening after the Friday fireworks to the upside. I'm sorry, Thursday fireworks to the upside. Then we had a Friday sell-off, and even the incident in Iran didn't help the bulls. So we were discussing 2 possible scenarios from the bulls perspective, right? Either we are go straight, break above the previous top of the range, hitting the supply based on the weekly, right? Or we are going to fail, we are going to, ahead of the FOMC, we are going to revisit lower levels. So if we had the stop count to the upside, we might see similar stop count to the downside. And then eventually, as long as we are above 1380, 1360, we might to try to attack 1,500 on the gold again. But overall, when you see what is going on FX side, what is going on here, looks like ECB is an event, but the biggest event is going to be FOMC day, and that's gonna be the last day of the July. So that's gonna be where the monthly charts are going to close. All right. So from the medium-term perspective, that's gonna be quite important. And the last one, oil. Once we broke possible demand on previous week, we retest broken demand, which should work as a supply. Right now we are holding below 57. So again, still think that the previous week low is gonna be pressured, and we might see stop hunt towards 54.30. That's where I do expect some around the 54 first bullish, eventually bullish reaction in that case, and then a little bit lower. We were discussing oil yesterday. Also, that's not discovering the America when you see what was to the left side. Still bearish here, as long as we are below 57, 58.30 based on the daily chart. I'm going to look for a possibility to fade intraday rallies, but you know I do prefer trading during the New York session, so I'm going to use the behavior from the European or London hours, and we'll watch carefully the behavior here. First attempt around 57 might be the case if I'm going to see some kind of the rejection, or higher towards 57, 85, 58. Guys, that's it from my side today. It was my pleasure to cover pre-London Open here for you. Don't be trapped, and please hit the subscribe button. Please hit the ring bell, so you are going to be notified in case I'm live later during the day covering crypto charts. Have a great one, and see you around.